Hi everybody, David Bannister with the MarketTrendForecast.com and ActiveTradingPartners.com here on Saturday, June 5th, reviewing this prior week's action on the S&P 500. We have here in front of us a chart of the S&P 500 via the SPY ETF, and we're going to take a quick review. You'll notice that I have put some labels on here to review prior forecasts. We had an ABC correction that ended on May 25th at 104.38 down in the lower right corner here. What we want to do is review some of the likely patterns based on what we've seen since the lows on Tuesday, May 25th. It was during that morning that I had predicted a bottom that day and that we would have a counter trend rally, and I thought frankly it would get up to this 113 area, maybe even 115. And so far that has not been the case. So what we want to do is review if this was a valid counter trend rally. Is the rally over for now and we're heading back down, or what are some of the possibilities? So what I'm looking at is the likelihood, actually in my opinion, that the probabilities are favoring some further downside near term, potentially below the May 25th lows. The reason I say that is if we look at the recent action in the market that we just saw, we had an ABC counter trend rally. We went from 104.38 up to about 110.70, back down to 107.37. It's a normal retracement, and then a rally up slightly above that A wave to 111 on the SPY. That's an ABC counter trend rally. It retraces 38% of the entire down leg from 122 to 104. 38% is a Fibonacci number, and it is a valid retracement on the upside of that downward leg. So it's very possible that that ended the upward movement in the market. And because we had a situation on Friday this week where you'll see a big gap here, the market gapped down from the Thursday close to the Friday open, and gap downs in a corrective situation normally are bearish. I want to point everybody down to the bottom of the screen where I've circled the slow stochastic lines. You'll notice that the last B wave high rally, which I'm circling up here, 117.68, you'll notice down at the bottom again where the stochastic number was. Now let's look at this ABC movement, which technically makes up a B wave. Same thing, you got the stochastics in about the same spot. So there's another indicator coupled with your downside break that would indicate that we're probably going to start a new and have begun a new ABC move to the downside. And that means there's a good likelihood that my 92 to 97 forecast will begin to come into play, you know, somewhere along these types of lines. So the problem for the bulls right now is that gap down break Friday was bearish. This cluster of support here looks like it may give way, and we are going to retest those 104 lows, but I think my opinion is there's a good chance that we will break below those levels this summer, and we'll knock down to that 92 to 97 SPY range. So let's stay on the lookout and stay tuned, and we'll keep you updated on the MarketTrendForecast.com and ActiveTradingPartners.com. Again, David Bannister, Saturday, June 5th, and we look forward to updating you soon.